Over the past few weeks, many investors have been asking the same question. Is silver simply moving sideways, or is the market quietly preparing for something much bigger? On the surface, it looks like another ordinary trading week. Economic reports are scheduled, central bank officials are giving speeches, and financial markets continue reacting to the latest headlines. Nothing appears dramatically different, but experienced investors know that the biggest market moves rarely begin with obvious warning signs. They often start quietly, hidden beneath everyday news that most people ignore. By the time the majority realizes the trend has changed, the opportunity has already started slipping away. This week has the potential to become one of those turning points. Welcome back to Ag John Silver Update, where we focus on facts instead of hype and help you understand what is really driving the silver market. Today we're cutting through the noise to examine the forces that could shape silver's direction during the months ahead. There are no unrealistic predictions here and no promises of overnight riches, just a careful look at the data, market psychology, and the signals professional investors are watching closely. If you've been following silver lately, you've probably noticed how confusing the price action has been. One session buyers seem completely in control, only for sellers to take over the very next day. Prices swing back and forth without establishing a clear trend, leaving many investors wondering whether silver is preparing for a breakout or simply drifting without direction. However, daily price movements only tell part of the story. Professional investors don't spend all their time worrying about today's candle or tomorrow's opening price. Instead, they focus on where the market believes the economy will be 6 months from now. Financial markets are always looking ahead. Prices constantly adjust based on expectations for the future rather than what has already happened. That is exactly why this week deserves more attention than many people realize. The importance isn't tied to a single inflation report or one speech from a policymaker. What matters is whether several independent signals begin pointing toward the same conclusion. When multiple pieces of economic information start supporting the same narrative, markets can react much faster than most investors expect. Before discussing those signals, it's important to answer a basic question. What actually drives silver prices? Many people assume silver simply follows gold or rises whenever inflation increases. While both certainly influence the market, silver operates under a much more complicated set of forces. Unlike gold, silver has two completely different identities. It is both a precious metal and an essential industrial material. When investors become nervous about financial markets or economic uncertainty, silver can benefit from safe haven demand, although gold usually receives most of that attention first. At the same time, silver is heavily used throughout modern industry. Expanding renewable energy projects, electric vehicle production, semiconductor manufacturing, artificial intelligence infrastructure, telecommunications equipment, medical technology, and large-scale electrical upgrades all require significant amounts of silver. This creates a unique situation. Silver doesn't rely on only one source of demand. Its price is constantly influenced by two separate worlds. One is driven by financial markets, investor sentiment, interest rates, inflation expectations, and monetary policy. The other depends on factories, manufacturers, technology companies, and global industrial activity. Sometimes these two forces support each other, sometimes they move in opposite directions and cancel each other out. That balancing act has made this year's market especially interesting. Something many newer investors fail to recognize is that silver has historically performed well under completely different economic conditions. During periods of strong economic expansion, rising industrial demand has supported prices. Yet during times of uncertainty, investment demand seeking safety has also helped silver gain value. The real challenge isn't predicting whether silver will benefit from one of these forces. The challenge is identifying which one is becoming more influential. That's why this week's economic calendar matters so much. Several important reports could reshape expectations for inflation, economic growth, interest rates, Treasury yields, and the strength of the US dollar. Notice the key word, expectations. Markets rarely move simply because new numbers are released. They move because those numbers differ from what investors were expecting. Imagine analysts believe inflation will continue slowing steadily. If fresh data instead shows inflation remaining stubbornly high, investors immediately begin rethinking how long interest rates may stay elevated. That single change in expectations can trigger a chain reaction. Interest rate expectations influence Treasury yields. Treasury yields affect the US dollar. The dollar impacts precious metals, and precious metals directly influence silver. Sometimes silver isn't reacting to the economic report itself. It's reacting to what investors suddenly believe central banks may do next. That distinction separates disciplined investors from emotional traders. Rather than asking whether today's report looks good or bad, experienced market participants ask a much more valuable question. Has today's information changed the future? That single question often explains market movements that leave everyone else confused. Over the past year, investors have repeatedly adjusted their outlook for monetary policy. Every time markets become convinced that borrowing costs could eventually move lower, precious metals often receive renewed interest. Whenever investors begin expecting higher interest rates to remain in place for longer, pressure frequently returns. The reason is straightforward. Silver doesn't generate income. Unlike government bonds or interest-bearing investments, holding silver doesn't produce regular payments. When bond yields become increasingly attractive, some investors temporarily shift money away from precious metals toward fixed income assets. Yet markets rarely behave according to simple textbook rules. There are times when bond yields rise and silver rises alongside them. There are also periods when the US dollar strengthens, yet silver refuses to decline. Whenever these unusual relationships appear, experienced investors immediately begin asking another important question. Is another force becoming strong enough to outweigh the usual market relationships? That is exactly what many professionals are watching today. Industrial demand continues to provide one of the strongest long-term foundations for silver. The worldwide transition toward cleaner energy hasn't disappeared. Electric vehicles continue requiring large quantities of silver for electrical systems. Solar installations remain a major source of demand despite ongoing efforts to reduce silver usage per panel. Artificial intelligence continues driving investment in data centers, modern power grids, advanced electronics, and high-performance computing infrastructure. Every one of these industries relies on silver in some way. Of course, none of this guarantees prices will rise every single week. Markets never move in straight lines. Economic slowdowns can temporarily reduce industrial consumption even while long-term demand remains healthy. That is why successful investors balance optimism with realism instead of allowing emotions to control their decisions. One often overlooked factor is that silver supply cannot quickly respond when demand suddenly increases. Most global silver production comes as a byproduct of mining metals like copper, zinc, lead, and gold. That means miners don't automatically produce more silver simply because silver prices rise. If production of those primary metals slows, silver supply can become constrained regardless of how strong silver demand becomes. This creates a supply picture that often takes years, not months, to adjust. Professional investors understand this dynamic, which is why they continue monitoring both physical demand and mining activity at the same time. And that brings us to one of the biggest questions investors should be asking today. What happens if demand continues growing while supply struggles to keep pace? Nobody knows exactly how prices would respond. But history has repeatedly shown that when tightening physical markets begin attracting stronger investment demand at the same time, the silver market can become far more dynamic than many people expect. Even if silver's long-term outlook remains encouraging, investors should never overlook the role of market psychology. Some of the biggest price swings aren't caused by dramatic news. They happen because expectations suddenly change. When too many traders are positioned on one side of the market, even a small surprise can trigger a powerful reaction. That's why professional investors pay close attention not only to economic data, but also to how the market responds to that data. Another important piece of the puzzle is the physical silver market. Futures prices often grab all the headlines, but behind those numbers are manufacturers, refiners, and industrial buyers purchasing real metal. If physical demand remains strong while prices stay under pressure, it may suggest that long-term confidence is still intact. On the other hand, if speculative buying pushes prices higher while physical demand weakens, the rally may not be as sustainable as it appears. Supply also deserves attention. Unlike many other commodities, silver production can't increase overnight. Most silver is produced as a byproduct of mining copper, zinc, lead, and gold. Even if silver prices climb sharply, mining companies usually can't respond quickly by producing significantly more silver. Bringing new mining projects online often takes years, which means supply can remain tight if demand continues expanding. This is one reason many long-term investors remain interested in silver. If industrial demand from electric vehicles, renewable energy, artificial intelligence, advanced electronics, and modern infrastructure continues growing while supply remains relatively constrained, the market could gradually become tighter over time. That doesn't guarantee higher prices tomorrow, but it creates conditions worth watching closely. Of course, risks still exist. If global manufacturing slows more than expected or economic growth weakens significantly, industrial demand could soften for a period. Businesses might delay expansion, factories could reduce production, and investment spending may slow. Those developments could place temporary pressure on silver despite its strong long-term fundamentals. This is why flexibility is so important. Successful investors don't become emotionally attached to one prediction. They adjust their outlook as new information becomes available. Markets reward discipline far more often than confidence. As this week unfolds, every major economic report, central bank comment, movement in Treasury yields, and shift in the US dollar will provide additional clues. One report alone won't define the trend, but several reports pointing in the same direction can begin changing expectations, and expectations are what move financial markets. Right now, silver sits at the intersection of changing monetary policy, evolving economic conditions, industrial demand, and constrained supply. Whether this becomes the beginning of a larger trend or simply another period of consolidation will depend on how these factors develop together. That is why experienced investors aren't asking whether silver will move this week. They're asking whether this week's events could change the bigger picture for the months ahead. And sometimes that's where the most valuable opportunities begin. As we move through the rest of this year, the biggest opportunity may not come from predicting every short-term price swing. Instead, it may come from recognizing when the broader trend begins to shift before it becomes obvious to everyone else. History shows that silver's strongest rallies rarely start with one dramatic headline. More often, they begin quietly as several positive developments slowly come together. A gradual improvement in inflation, steady economic growth, resilient industrial demand, lower interest rate expectations, and stronger investor confidence can collectively build a much stronger foundation for silver. On the other hand, if inflation remains stubborn, interest rates stay elevated, the US dollar continues strengthening, or global manufacturing slows sharply, silver could experience additional volatility before establishing its next major trend. That is why patience remains one of the most valuable qualities an investor can have. Markets rarely reward emotional decisions driven by daily headlines. They tend to reward those who stay informed, focus on the bigger picture, and allow facts, not emotions, to guide their investment choices. Going forward, there are a few key indicators worth watching. Keep an eye on inflation reports, employment data, Treasury yields, the US dollar, and signs of industrial demand from sectors like renewable energy, electric vehicles, artificial intelligence, and advanced manufacturing. Together, these factors will likely play a major role in determining silver's direction over the coming months. Investor sentiment is equally important. If institutional investors begin increasing their exposure while physical demand remains healthy, it could strengthen the market's long-term outlook. However, if optimism becomes excessive without support from the fundamentals, periods of sharp volatility could quickly return. That's simply the nature of the silver market. At AgJohn Silver Update, our goal isn't to predict every move with certainty. It's to help you understand the forces shaping the market so you can make more informed decisions. Silver remains one of the world's most unique commodities because it sits at the intersection of finance, technology, manufacturing, and global economic growth. That combination creates tremendous opportunities, but it also demands patience and discipline. The months ahead could prove extremely important for silver investors. Central bank decisions, economic data, industrial demand, and market sentiment will all continue influencing the bigger picture. No one can predict every twist and turn, but staying informed gives you a significant advantage over simply reacting to headlines. If you found today's analysis helpful, be sure to subscribe to AgJohn Silver Update and turn on notifications so you never miss our latest silver market updates. We focus on facts, avoid unnecessary hype, and break down the information that matters most to long-term investors. Thank you for watching, thank you for your continued support, and as always, stay patient, stay informed, and I'll see you in the next update. 2009就艾特一就